Every single dollar that you have, think of them as workers. Every single one of them should be making you money. They should be doing something, some type of work. They should be giving you some type of return. So the dollars that are sitting in your accounts, your bank accounts, are they just sitting there doing nothing? They're not working. They're not giving you money. They're not giving you anything in return. So those dollars are not working. They're bad workers. And we're going to label the dollars that are making you money good workers. So what are some good workers? What would they be doing? That could be you buying a book, you buying Think and Grow Rich. Those dollars that you put into that book, they're now working because they're giving you a return. They're giving you knowledge. They're giving you value that you're going to use to amplify your net worth. Invest in yourself first. What does it look like to invest in yourself first? Like what I just said, buying books, buying things in your life that is investment for you. It could mean a better pillow. Like go to the store, get a proper pillow so you get a good night's rest, a proper bed, whatever you need. Invest in yourself, like so that you can bring up yourself, so that you're able to 10x your income and 10x yourself and what you're putting out into the world. Another one, invest in the foods that you're eating. Are you buying foods that are cheaper and saving money, thinking you're saving money, but you're actually just doing yourself a disservice by buying all this like bad foods that's just going to slow you down because they're going to give you negative health effects and negative health consequences, and then you're circling back because now you have to fix your health, which is more expensive. So whenever you think like a healthy food is too expensive, think your health is worth everything. Do not take your health for granted, okay? So invest in yourself, invest in the things around you, invest in your well-being, your routines, your skincare, your hygiene, everything around you. Like invest in it, like invest in you first, like invest in things that are going to be a tool for you. So even if that is like a hair dryer that like really works and it's more expensive, but like it's going to make you have like effortless hair and it's going to help you like just elevate. Like invest in those things, because this is all going to help you return what you've invested. So random things that don't give you return is like you going to like this fast food place that's going to be negative to your health. Not only is it not going to give you something in return, it's going to literally bring you down. So you were at this level and now you're going down. You want to be at this level and now you're going up because of what you bought. Those dollars that you're spending is making you back something. It's bringing you up higher, not bringing you further down. Number 2 is a really good tip, and that is never use a debit card unless you really have to, but always use a credit card that gives you some type of benefit. So I'm sure there's a million videos on like YouTube about like what credit cards to use and the best ones and highest returns and stuff like that. Use one that makes sense for your lifestyle, and then just use that, and then you're getting money based on what you're spending. So not only are you now spending on things that you're going to make money on because you're elevating yourself, now you're actually going to make dollars on the money you just spent. And this goes hand in hand with also building your credit score. It's really important to build a credit score when you're young, so that's crucial. I would say if you have to, like, keep applying to different credit cards, you're probably going to get maybe either disapproved or rejected, whatever, but you just keep going. Like, you're going to go to the next one, whatever, just reapply, you're going to get in, you're going to get a credit card. And then every time they ask you, do you want to raise your credit limit, like how much you can spend, of course, accept that. And then it's just going to look better and better for you. And then you're able to do more and more things and then get more and more benefits and privileges. And also pay your credit card on time. As best as you can, pay your credit card every single month, like on time. Don't ever let it pile up because it's just going to look bad on you. Okay, so as best as you can, do this as best as you can, okay? That's it. Now we are moving away from the indirect investments. So indirect investments were all of the things that you're putting into yourself, like the items that you have for your self-care and your hygiene and just you and your, like, what you even look like as a person, like your appearance, things that you're just putting into yourself, like that type of investment into yourself. And now we're going to move into direct investments, which is like your stocks, your whatever, your investment portfolios and your assets and stuff like that. So if anyone knows me in real life, they know I've been doing stocks for a while now, as basically as far back as you are allowed to do stocks and open a TFSA account. I opened one with Questrade a long time ago. So I do know a thing or two about investing into stocks. I would say everyone has their own investment journey and like learning from their mistakes. I've definitely learned from my mistakes. I've lost thousands of dollars, and I'm sure a lot of people have. I'm sure that's like what I've lost is nothing compared to what others have lost. Just like my old video, guys, we fail our way to the top. I would never let those losses, doesn't matter how many thousands of dollars, like never let that stop you. Like never let that think like, oh my gosh, I'm never gonna invest again. Like I'm never gonna get your money up, invest again. That's it. Like you just keep going. So for investing, we want to there's so many different ways you can do this, and there's so many stocks you can buy. There's so many different things you can do. Cryptocurrency, you can do Forex. Forex is not only an investment, it's kind of like a day trading type of thing. You'd be more, it would require more attention. And then for stocks and cryptocurrencies, these can either be short-term or long-term holds. So short-term would be like you're holding it for like a week or two, maybe a month. And then long-term is you're holding it for like over 6 months, over a year, over 5 years. And there's even stocks that I've had for like as long as I've had the account. And before we get into this section, I want to just obviously say a disclaimer. I'm not a financial advisor. Do not take my financial advice without researching and doing your due diligence on your own as well. But let's get into it, okay? You want to diversify your portfolio. Diversifying your portfolio meaning you want to choose different sectors of the market that you want to invest in. So if, say, technology is down, well, you have your healthcare up. That's just like a random example. This is if you want to invest in individual stocks. Like, I would say the best thing to do is just start and learn along the way. Like, if you mess up, like, it's basically your fault. You have to learn from your mistakes. An easy way for you to curve like choosing the wrong stocks is to choose index funds. So we're going to get into index funds, ETFs, and these would be stocks that are going to be an index of multiple companies. So an index is like a big group, an index. So there's the S&P. Everyone's heard of the S&P. It's going to be a big top 500 companies in America, or a sector. There's S&Ps on different sectors, but you can just do like the most popular, like the basic ones that really have like almost like a guaranteed return of at least 10% annually. So, and of course there is dips. That's where like people say like buy the dip. You can do that, but it's always going to be best to just buy and not try to time the market, because it's very hard to just time the market. None of us are, I guess, fortune tellers. Like, we can't time the market and figure out like when's the best time to buy. We just have to buy, and then you just keep either adding to that over time or you average down. You can always average down if things go down. And what averaging down means is you bought at, let's say the stock is let's say the stock is at $100. You bought at $100 and now next week goes down to 90. You can buy more at 90 if you are confident in this stock and it's going to go up, especially if it's an index fund. Then you can now buy more. This averages your price down. So let's say you bought one stock at 100, now you bought one at 90, and now your average, like where it's going to say you bought the stock, is going to say 2 at 95. This is averaging where you started from. So now when it goes up to like now 105, you've made more than if you did with just the $100. Okay. And if it goes up, it goes up, you made money. And if it goes down, you average down. Like, there's really no losing. If you diversify and you invest in proper index funds and things that are guaranteed, almost guaranteed to have a return. I'm going to put up a few examples of some stocks that you guys can invest in that are really popular that most people swear by. So these stocks that you see are going to be not individual companies. Like we said, they're a huge group of companies, and these are following the American economy growth. Another point that you want to know when you're investing is do not go into investing with emotional. I know it's very hard to not do this, but don't do emotional investing where like you're going to see your stock that you just bought, it's going down, and now you're like scared and you're going to pull out. Like, what are you doing? Okay? Like, that's not how investors live. We don't do that. We keep it, and you don't get emotional when things go down, because you know that things that go down also go up. So if you keep it to these guaranteed gain, low risk type of investments, then you're going to see growth regardless. And this is where you're putting your money into something that's going to be making you money back. So back to like, if all your dollars were workers and you're the big CEO, are they making you money? Yes or no? Like, that's the whole point, is we're just trying to make our money work for us, okay, and not against us. Money in a bank depreciates, okay? That's the whole point of moving it out of the bank into an investment, or moving it into things that are going to be investments into you. So indirect or direct investments. Also, I don't really know if they're called indirect and direct investments. That's just what I'm choosing to label them as. So that's what we're going to label them as. For higher risk, higher reward investments, you only invest what you're willing to lose. So if you are in like, this is the last $3,000 you have to your name, and you have to pay your rent, and you're hoping that it grows, and if you don't pay your rent, you're going to be kicked out and evicted, don't invest that into a high risk, like high reward type of thing. Like, don't do that. Obviously, like, just invest what you're willing to lose. Like, if that was lost, would you still survive? Would you still have like an emergency fund for like the next couple months? If yes, okay, then you're safe to invest. That's basically the principle here, because you will lose money sometimes if you're investing into your own individual and you choose to like kind of self-direct investments and you choose to just choose like random stocks that you think are like going to do well, or random cryptocurrencies you think are going to do well. Only invest what you're willing to lose, especially with cryptocurrency. Cryptocurrency is very volatile and it's very like up in the air. We don't know anything. Nobody can predict what's happening. Also, if you guys don't want to get coin, like a Coinbase or a Binance, like a cryptocurrency platform, you can actually invest in Bitcoin on Questrade. So I don't know if you guys have Questrade, or I think there's also in Wealthsimple, there's a stock called GBTC, and this is following the Bitcoin trend, the trend of Bitcoin. So you can invest in Bitcoin without actually having like investing in Bitcoin. Do you know what I mean? So the tax rules that would apply to, say, your like Coinbase account wouldn't apply, and you wouldn't have to pay any taxes because you're now in a tax-free savings account and you're investing on Questrade and not some cryptocurrency platform. So that's just like a little insider tip. But you guys, again, I'm not a financial advisor. Do everything, like do your own research for everything. And I'm sure I'm probably gonna have people like saying like, that's not right, whatever. But this is just like what I've done, and I honestly feel like I've learned a lot in my years of investments, and it's working for me. So at the end of the day, do your own research. Okay, so our next tip for investing to make you financially free is decrease your liabilities and increase your assets. So what are liabilities? What are assets? Assets are things that are going to be of value, things that are either appreciating or just in value. And then things that are liabilities are things that are going to be like costing you. These are things that are going to be like a burden to you or costing you or not benefiting you. For example, a car. Buying a car is not an asset because it depreciates in value unless you're like flipping it or you're doing some work to it. Then most likely it's going to be depreciating, and it's going to be basically just taking money out of your pocket and not adding any value to you. But again, it's your decision. Cars are necessary in this world, and it could be an indirect investment to yourself because now you have a car, you can drive to your job or drive to do this certain content or make videos in your car that are like interesting and entertaining. It's all up to you. An example of an asset would be maybe like a watch. So some people are really into buying and reselling watches, expensive designer watches. And so what would happen was when you buy that watch, it can cost a amount of dollars. And then when you sell that watch, it actually is appreciating. So it increases in value, and then you sell it for more, and then you can make like a whole bunch. Like you can make whatever percentage off your investment, 10, 20, 30% off your investment. So this is called assets. So invest in assets in your life and decrease your liabilities. So this doesn't mean have no liabilities. It's very hard to live without any liabilities. You want to just decrease them as much as possible and increase your assets as much as possible. It doesn't have to just be watches, guys. It could be like designer bags that go up in value. It could be gold. It could be anything. Anything that's going to be an asset, really well researched real estate, just things in general that are going up in value. Another point too I want to point out is your network is your net worth. So always connect with people, build connections, build relationships that are genuine, and genuinely care for others' well-being. Show that you're actually like a good, decent human being. Like show your character. Don't be afraid to just show your character. And develop relationships with people that are genuine and caring and just like lasting relationships with people that you want to aspire to be like, people that you think are interesting, people that have the life that you already have, people that are in a mindset that you wish to obtain, like people that are just like doing things that you want to do, people that just you think are good, positive people. Like positive energy is good. Even the Robert Greene's books, like he literally says like avoid the unlucky and unhappy. It's just things that are unfortunate, but these are just people that are just going to be bringing you down. Like as much as you can, avoid these types of people and be around people that are positive and growing and up-leveling themselves and self-developing themselves and reading self-help books and eating healthy foods and working out and doing this and doing that. Like be around people that are going to be like pushing you to be a better you. Okay, so lastly, I want to talk about attitude towards money. This definitely could have been the first step in this video, but I wanted to make it last because I feel like it's like a good vibe to end the video instead of just like the first step being like, you're not making money because of this, what you're thinking. Okay, like we talked about like practical steps, but now let's get to like the spiritual, the emotional part of money, which is the poverty mindset. Poverty mindset comes from your parents, obviously, and society, and just the image that you see other people portray with money and their relationships with money. You need to change your relationship with money. I don't want to fear monger you, but if you don't do this, it's just going to catch up to you. Change your relationship with money. Don't be so scarce with money. When you go and buy a book from the bookstore and it says like $30, people are like, oh my gosh, $30, that's a lot for a book. That is not a lot for a book. Do you know what a book offers you? Do you know how much it changes your life? Think about how much therapy costs, 1 hour of therapy. That book that's $30 is nothing. Is nothing. Even if the book is $40, $50, $60, a book could be $300, I'd still buy it, because it's giving you so much value that you can literally reuse and reread, and also like hand it down to other people in your family and your friends. Like keep it going, like keep the knowledge going and just keep growing from it. Like these books that you don't want to spend the time and spend the money on could literally change your life, because they're teaching you an entire new way to think. Like everything that person has ever learned in life is pushed into this one book. Think about that. Like imagine all the lessons and all the life experience you have was pushed into one book, and someone else got to read that. Instead of doing all the things that you did, they just have to read that book and that's it. Like, and it shouldn't take this many years for you to realize like books have value. Like everyone that's successful always says, oh, I read this many books. I've read this book. I've read that book. This book changed my life. Like, why does it take you this long to realize that reading is good and beneficial? It's going to change your life. Not necessarily change your life. It could change your life. It's what you do with the information that changes your life, not the book itself. It's what you do with the information. I'm also going to leave a link so you guys can make your own Questrade investment type of thing in the bio, and you guys can open an account. I would definitely suggest opening Questrade. It's a really good platform. They have like amazing customer service, so every time you call them, like there's some like people ready to help you, and they're gonna, even if they're like busy, they'll call you back, and it's just like, this is just like a trusted place to be. And if you do use my link in the description, you do get $50 that you can use towards like a stock investing. So I would definitely suggest trying that out. Back to what I was saying. So where you put your money is important. Don't waste it. Like when I say don't be frugal and spend your money, don't be scared to spend your money, it doesn't mean don't go spend your money on just BS at the store and just things that you don't care about or use, or things that are just like trending right now, things that are like not going to add value to your life. Think of every time that you buy this product, is it going to bring you health, happiness, or success? Or more money? Like health, happiness, or success. Is it going to bring you those things? Think about it. Like before you just buy impulsively, maybe think about it for a few days. So if you like you're online shopping, maybe not in the store, okay? Like if you're in the store, whatever, you should have thought about it before. But let's say you're online shopping. Like let's say you found a really good product that you want to get. Let's sit and think about it before we buy it. So let's sleep on it for like 2 days, and then if you really want that product again, go back and buy it. But if you realize like, you know what, I actually really don't need that, like I could use that money for something else, then you stop yourself from like just throwing money out the window. It's that simple. Just ask yourself, is it going to bring me health, happiness, or success? That's it. And we always talk about mental health and emotional health and physical health and nutritional health and social health, but we don't talk about financial health. Financial health is just as important as all the other aspects, because there's needs that your body just needs. You just need as a human being, and you need to achieve those sometimes just through money. Like money is just needed sometimes, okay guys? Most times. So don't shy away from like financial health and just be like so humble where it's just like, no, I don't want to make money. No, it's okay to want to make money. Money and currency is energy. It's not a physical object. Don't think of it as a physical object. Think of it as energy. Push out things that are going to bring you back that energy back. If you want money and things in return, you have to give. You have to give to get in return. So what are you putting out to get? Okay, guys? So what are you putting out into the world? What are you putting? What value are you giving to the world? Even in your job, it could be a job. It could be your business that you have. If you're an entrepreneur, or if you're working like a 9 to 5, what value are you putting out into the world where people want to give you their money? Okay, that's as simple as that. Okay, so my links are in the description if you want to work with me one-on-one. I'm a health coach, and you can just message me on Instagram as well. And I'll see you guys in my next video.